Okay, in this video, let's begin to take a look a little bit closer into the day's trading, and we're going to do that by again starting with a 15-minute chart, and we'll look at the trading on Friday, July 31st, and then after that we'll get to Monday, August 3rd of 2009. That's today was August 3rd, 2009. So what we're going to start to look at is how does the volume-based analysis using some more refined tools based on the principles of market profile and volume analysis of the behavior at the value area, high, low, and point of control. And what we're also going to always do in our way of looking at the day's trading is combine with the value area high and low from the prior day the developing value area high, low, and point of control of the current day. So we're going to see that the value area created from the day before is going to be represented by these light purple lines, and the current day's developing value will be these more red violet or darker red purple lines, and then the point of control for the building current day is going to be yellow. The previous day's point of control would be orange. So let's just look at these 15-minute bars for Friday, July 31st, and what we see on Friday. It was an inside day, typical summer Friday, narrow trading range, and basically just bouncing off the high and low as it was testing the lower end of the value area created from the day before. And right off the bat, similar as we've done in our previous videos, especially the three-part series of video 2, remember before watching this you really would benefit by watching all the earlier videos. This is meant to be a sequential development based on the fundamental principles introduced in the first video. So be sure and watch the introduction, video 1, 2, all three parts, and then this will make more sense. So what we see on Friday as trading opened up, it immediately went into the value area low from Thursday's trading, and this is the 9 o'clock bar, so the second 15-minute bar of the day. Went almost to the point of control, didn't make it, which is a bearish sign right there. But now we're going to start looking at an additional very, very valuable information just from a special tool available in RT Investor called the Delta Breakdown. Now, to understand Delta Breakdown, it's really not that complicated. We're not going to get too complicated. Let's look at it in practical terms. It's called the delta because what it shows is the relationship between the volume of the number of trades put on that were lifting the offer and the volume of the number of trades that were put on hitting the bid. So maybe from a beginner's perspective you might look at that as when they're hitting the bid, the market's going down. So that means they're willing to go to the market on a falling price, and if they're lifting the offer, they're willing to go to the market and pay a tick higher as the market's going up. So the logic is if everybody's willing to pay up, pay higher as the market's rising, you know, which is called lifting the offer, we're gonna represent that, let's say, in the green column. And if they're hitting the bid, willing to go to the market on a falling price, then that's going to go into the red boxes. And each segment of time, such as 15 minutes, if you have a lot more people hitting the bid, in other words, aggressively willing to sell a lower tick, then you're going to see a bar that's a lot more red like this. So on the high bar of the day so far, the second bar of trading on Friday, the high price of the day was met with a dramatic increase in people hitting the bid, dropping to lower values. So the point of control of that bar now is represented by this yellow line here. So this is a special feature of RT Investor that lets you plot exactly the bar, the price level inside each time period bar or even a tick bar that is the highest volume of the bar, and this becomes very valuable information. So for example, on the low bar of the day, the highest volume was up pretty high in the bar, so it wasn't as dramatic selling as it might have appeared. So you get that valuable information, and then the following bar, the point of control was just one tick lower, so you had everybody jumping in here, whether long or short, whatever, we can figure that out later, but this is where the maximum value was for a 30-minute period, right in that area. So as we evaluate the high of the day being made with the majority of people aggressively selling, that's a good bet to sell. And in fact, it would have been a very good trade. You had a sell-off, you know, after it closed very low in the bar. You can see by the red bar there. But after closing at 84.75, it went all the way down to 79.50. So that's a good 5 points of potential there for recognizing, just even on a 15-minute bar, even willing to sell very low in the bar. Of course, you did have just a very small bounce there to get in on a little bit of a retracement, but substantial reward for that risk. Now, as we go through the day, let's just look a little with some broader strokes. We can see the turns always, as this value area was building here, that high volume was really what held the whole rest of the day. That turned out to be a value area low, and this is where the most volume was in the day. That became the point of control. And once again on this high here, it was a 4-bar high. The delta was very negative, so that was a good sell. And here on the low, for this hour and 20 minutes or so, was another good green buy signal on our delta breakdown indicator. So it's been very consistent on this day, as I will tell you it always is, but you do your own research. A very, very powerful tool on this high here. They both had the same high tick, these two bars, but you can see that the delta went from green on this bar to what turned out to be a false breakout, because you can see these blocks here are bigger. That means there's more volume, so the bigger size of the blocks indicates more volume traded than, for example, the prior bar. That was a smaller box. So here you have a big increase of volume, but nobody is willing to lift the offer even one tick above the prior bar. So on the you had the delta showing that in fact maybe buyers and sellers were even, but a lot of people who got in on this bar got out on this bar. So that sent it down again. Now you just had one bar of the negative delta, and then the next bar was positive at the same low, so it shot up. And you might have thought this was going to be a breakout, but guess what? The point of control was underneath the high of these two bars. So all this volume that you see here actually got what we could call scrunched up, and was there underneath the prior high, and that's a false breakout. So once again, if you get inside these bars, that gives you a lot of valuable information. You find the point of control was there, and the bar just closed one tick under the point of control. You can see by the green line there. So now that 15-minute bar is closing underneath the earlier high. Almost a significant portion of the volume was underneath the previous highs, and it's closes 2:30 in the afternoon. That's why everybody sold into the close, and a very, very strong increase in hitting the bid, dropping the market down all the way into the close, and that will bring us up to the close on Friday. And then let's take a look at August 3rd, Monday, and see if we can learn some more.